Hey, what's up guys, Houston here, and for those of you just finding my YouTube channel, welcome. Please remember to hit that subscribe button and that bell. Now, for those of you that's been supporting me and following me, as always, salute. Now, today's video, we're actually going to be talking about the best secured credit cards to build credit fast, okay? And the reason that we're talking about these secured credit cards is because a lot of people, they're on the fence on which credit cards to get. So we're going to talk about the ones that actually don't pull your personal credit, or let me clarify that. These credit cards do pull your personal credit, all right? However, it's not a hard pull. So that means that it doesn't affect your credit score. Okay, so when you see credit card companies advertising that we don't pull your personal credit or whatever, what they mean is that they don't do a hard pull, because there's some things that they're checking for in terms of when they're trying to qualify you for this credit card, all right? And here's the things that they're going to mainly checking for. Your income, okay? Your inquiries with some of these cards, I don't think that's going to be a big issue because they already know you have challenging credit, okay? So I don't think that's going to be a big, but what they will check for is your DTI, your debt to income ratio. And so for some of you, I know many of you all have heard that term, but some of you all may not be clearly on what that means. So what that means is basically, if you have $1,000 coming in, right? But your income, but your bills is about $600. Just say your rent. Just say your rent is $600, right? So then you're at a 60% debt to income ratio, okay? So with some of these credit cards, I know people have said that they got denied for a certain credit cards, secured credit cards and stuff, and it's possibly because your DTI is above 60%. Now, some of them, this is their ratio. They'll tolerate 50%, and some of them will tolerate up to 65%. Okay? So that's what you have to understand. But again, the 50% is pretty much the norm in terms of debt to income ratio that they're actually looking at. So if you're not being qualified for a secured card, that means that your DTI is probably too high. But nonetheless, that doesn't mean that you can't get a secured credit card. All right. So that being said, let's talk about some of these secured credit cards. First, I want to talk about Discover It. Okay. And granted, Discover It being a secured credit card, okay. The reason I'm going to talk about them is because they have a couple things that may be to your advantage, all right? And so with Discover It card, all right, here's the situation. Like, they have the secured cards and they have student credit cards, all right? And so sometimes you may be able to get the student credit card, which is an unsecured card, okay? Now, granted, they do hard pull, but some say that they do have a soft pull application, all right? And in terms of what credit bureaus they pull, they may pull from your Experian or your Equifax. It just depends on what part of the country you're in, okay? So if you're on the East Coast, they may pull from your Equifax. If you're on the West Coast, they may pull from your Experian, all right? But that's just one of the cards. Now, some of the cards that most people really do qualify for is like OpenSky, okay? Now, with OpenSky, again, you're talking about these are the type of cards that do a lot of upfront fees and stuff like that to get the card started and stuff. So the ones that charge high fees and stuff to get the card started and stuff, that can be a drain on your budget when you're trying to build your credit. So you have OpenSky, you have Green Dot. Now, here's the interesting thing about Green Dot. Granted, they are trying to help people rebuild their credit, but they also just did a partnership with American Express. So I made a video talking about American Express new business checking, right? Okay, so they have a new business checking, and Green Dot is going to be their issuer of that. And the checking account is called Cabbage Checking, because American Express had purchased Cabbage. So it's going to be called Cabbage Checking, but Green Dot is going to be the issuer of these accounts and everything, okay? And the reason I'm saying that is because thinking about further down the line, once you have more established credit and everything, you may be able to get a business checking account again with American Express. That would also help you build a relationship so that you'll be able to get business credit cards as well as other personal credit cards with American Express as your credit score gets stronger. All right, so that's the reason that I'm talking about that. Now, that being said, another card is Applied Bank. All right, is Applied Bank. Now again, these top cards here for secured cards, building your credit and stuff like that, they do charge a lot of fees and stuff like that to get them started and everything. However, this is one thing I would tell you guys. Many people, they would start out with these cards and then they may have 2 years of history on it and then close it out. I would tell you, do not ever, if you have a credit card that you're using, okay, and even though it may charge us fees, but you have at least two years of history on it, do not close it out, because you can hurt your credit score. This is what happens to a lot of people. They start rebuilding their credit, and then like when they have these cards with high fees and stuff, they'll pay the card off and then they'll close it out and they lose all the history. So you don't want to ever close that card out. And what you want to do is make sure that in terms of this here card, when you're paying your fees and stuff, once you've used it and you haven't used it lately and stuff, just keep an eye on it and make sure that all of your fees are paid up. So that way they don't just hit you with a $29 fee that goes onto your credit report and that drops your credit score down to 50 to 80 points. And you're like, what happened to my credit score? It's because those small fees, even though the credit card was $200, you paid it all, but again, they still charge you that fee. So you need to get a clarification in terms of how do I manage to keep this account without it actually closing out and without it actually affecting my credit score, okay? So that's very important that a lot of people miss and they end up hurting their credit score. Now, here's one that I'm gonna talk about. And it's called the Apple Card. All right. Now, with the Apple Card, okay, they do a soft inquiry, so you don't have to worry about it not affecting your credit and stuff like that. And they're issued through Goldman Sachs. However, if you're denied the Apple Card, they have this thing. It's almost like a second chance. It's called Path to Apple Card. Okay. And what that means is that they start showing you the things that you actually need to build up your credit and stuff, so that not only you getting approved for an Apple credit card, but to be able to get approved for other credit cards as well. So it's called the Path to Apple. So if you ever been denied, you can check out their Path to Apple card, and that would help you rebuild your credit. If any of you out there in the market have used the Path to Apple, let me know your results. How long did it take you using the Apple card or the Path to Apple card to actually get the Apple card, if you actually taken advantage of that offer? Okay, now here's another card, and these cards that I'm going to talk about, these are fintech, financial tech company cards, and these are cards that are actually focusing on helping people that may not have no credit at all, or maybe just starting out with credit, may not have a social security number, and they still need to build credit and stuff. So these type of cards is some of the cards that you may want to take into consideration. All right, you have Credit IA, that's one. Then you have Tomo. You have Patel. 2. It's called Patel 2. So those are some of the cards. You also have Deserve. And, excuse me. Now, here's the thing about these type of fintech cards. What they're trying to do, they're trying to calculate in other factors to help you get your credit. Like they're looking at your education, your degree, what type of degree that you're actually majoring in. These are the type of factors they actually look at in determining how to help you qualify for credit and stuff. And to be fair with you, most of these, they're going to pull from your experience, okay? But again, it's a soft pull, so it's not going to affect your credit, all right? But these are some of the few cards that you can be able to qualify for. If you don't have a social security number, you're starting over, you're trying to rebuild credit or something like that. These are the fintech companies that will possibly be able to help you. Now, I'm going to switch lanes right quick because I want to explain something to some of you guys out there. You may be in a position to where you're struggling to try to get car loans and stuff. And I made in a previous video, there is a financial institution out there. They're saying that they have products to help you get into a car no matter what your credit is, okay? And so that financial institution is called Peach State Credit Union. Now, for any of you guys have ever used them, if you ever applied with a Peach State Credit Union to get a car loan and stuff, put a comment in below. Let us know, what have you done? What was the process? Was it really just as they said, no matter what your credit is, they have products to help you get into a car loan? So let us know what it is that they have done to help you get into a car. And if I'm doing a good job in explaining this, can I get a thumbs up? You know, I don't mind if you all comment. Let me know if I'm doing a good job explaining this and sharing this information, because this is information that our community needs. A lot of people out there that are talking it, but I'm actually trying to put it out there so that you all can actually leverage from it. All right. So that's the reason that I'm making these videos. All right. Now, here's another strategy to help you boost up your credit score. And that's AUs. And AU stands for authorized users. It stands for authorized users. And so what that means is that you may have a family member that has established credit for a long time and stuff. And what you can do, you can ask them if they wouldn't mind adding you on as an authorized user. Now, here's the thing you have to understand. I want you all to be very careful with this, okay? With using authorized users. We have seen where people have got approved for credit cards and then they add a family member on right away, right? But when you have new accounts and you add a family member on as an authorized user right away, it doesn't benefit their credit, okay? Well, I take that back. It does. And the only way it benefits, they get the trade line. But there's no history, okay? And for many people that may have bad credit or starting out with credit, the problem is they have a thin credit file. And for most lending institutions, they want you to have a credit file at least 3 years old. This is why authorized users are important. So you may hear people say authorized users are not important, but they do work and they do benefit you because it helps age your credit file, okay? So that's the reason that you want to add authorized users. Now make sure that, again, if you have a family member or loved one, make sure the account is over 2 years old. Make sure they haven't missed payments in the past I would say in the past 90 days, okay, or longer. Usually they don't want accounts that affect your credit is 9 months, okay? Now here's something else that you have to understand. Say that you had a family member that added you on as an AU, all right? And then they didn't pay their credit card bill. Just one moment, guys. So you have a family member that added you on as an authorized user. However, they stopped paying their credit card bill and you're on as an AU. That drops your credit score, right? So what you can do is look at what lenders that are authorized users that your family member or whoever added you on. If that credit account went bad, you want to call the bank, okay? Call the bank and say, hey, I was added on as an authorized user. Could you remove me? And they will immediately remove you, and you would see an increase in your credit score. This is very important, guys, because you need to boost up your credit. You don't want your credit to go down. I would tell you something else. If you are in the market of trying to get a mortgage, right? And you're dealing with FHA loans. A lot of times FHA, they don't want to see authorized users on your credit file. So you have to remove those in order to get approved. Some of them, they may, but for the majority, through my past years of understanding mortgages and stuff like that, if you have authorized users on it, they don't like counting it, and they ask you to remove them off the credit file, okay? So that's something that you need to understand about authorized users. But authorized users definitely can help you boost up your credit. Now, here's something else that can help you increase your credit as well. It's called the shopping cart trick, okay? And for some of you, you may already be familiar with it. Well, with the shopping cart trick, mainly it's department store cards and stuff. Say that you're trying to get a credit card from Victoria's Secrets, okay? Or you're just trying to get the card just to get a trade line, right? So you're on the website at victoriasecrets.com and you're putting stuff in the shopping cart and everything. Then you abandon the shopping cart. Then a pop-up will say, hey, you can qualify for a credit card. So what happens is you get the trade line, but they don't do a hard inquiry on your personal credit. That's the shopping cart trick. And some of these department store cards, they'll give you high limit credit cards. And most of the financial institutions, most of these cards come from Saucony Bank. So that's the reason that in terms of like with the shopping cart trick, most of these cards are easier to get through Saucony Bank. Excuse me if I'm mispronouncing that incorrectly, but nonetheless, the shopping cart trick definitely can help you get some positive trade lines on your credit file. Now, I would tell you, I wouldn't do no more than 2 cards of the department store cards, really, because they don't really have, they're really not beneficial when you're trying to, if you're actually trying to get funding and stuff like that. They're good as trade lines to help build up the credit, but in terms of if you're focusing on more trying to get money and stuff like that, approved for more credit cards, revolving store credit cards and loans and stuff like that, you definitely don't want to focus on a whole lot of department store cards, okay? Now, here's another card I forgot to talk about, is Avant, okay? The Avant card. Again, it's a soft pull on the credit and stuff like that, so you don't have to worry about that. And they pull from Experian as well. All right, so those are the credit cards that you can possibly get approved for to help you start rebuilding your credit. These are secured credit cards, and again, these here are not secured credit cards. These are unsecured credit cards, right, that you may be able to get approved for. All right, so in terms of talking more about let's talk about something else that you may need in order to help you build up your credit, okay? And that's talking about loans. Loans are very important when it comes to helping you build up your credit. So most people, they like Navy Federal, right? So Navy Federal have the N rewards as a secured card, right? So they have the N rewards. Then they also have the pledge loan, okay? Here's what you do not want to do. If you get a pledge loan with Navy Federal, do not pay it off early. The reason is because loans are very important to help your credit. That's the reason people that may have a good credit score, So they decide, okay, I have my revolving credit, I have this loan here, I'm gonna pay it off. And when they pay the loan off, what ends up happening is their credit score drops, okay? So that's the reason you have to keep a loan on there. And I understand about the fees and interest and stuff like that, but it's very important that you actually keep the loan on there. Now, here's some other credit cards that you may be able to get that do a soft pull, okay? Now, and they have secured cards too, but they have regular credit cards, but they do offer a soft pull on the credit, okay? You have First National Bank of Omaha. You have Capital One Platinum, okay? Now, let me elaborate on Capital One Platinum. It's a secured card, but many a times on a pre-approval, you may be able to just get the regular Capital One. I think it's the Savior card or something like that. Someone that's familiar with the card, make a comment below and let me know. But at the same time, if you're not able to get the regular credit card, they do have the secured credit card, okay? It's the Capital One Platinum card that you have to put money on and stuff like that. But again, the good thing about it, it reports to all the credit bureaus, and you may be able to get a pre-approval before you actually do the hard pull on it, okay? Now, here's another financial institution, BB&T, and they do a soft pull as well. Now, let me go back and talk about Navy Federal, okay? Because in terms of when you have bad credit, but if you're a member of Navy Federal, now there have been people with a 530 that's been getting $10, $15, $25,000 credit cards. And I made a video and I'll put a link so you can actually see that video. And for those of you that's trying to figure out how to build a relationship with Navy Federal, put a comment below and say, Houston, please send me the video, and I'll send you the video so you can actually check out that video as well, okay? But it's definitely very important. Now, if you have bad credit and you have income, but you're trying to get a loan and stuff, and no other lender will work with you, there is one lender for a loan, and it's IndyLand, and I'll put a link below so you can check them out, all right? And so the main thing that they're going to focus on is your income and your debt to income ratio, okay? Now also keep in mind, this is a very big factor, because some people, they may be in the process of a bankruptcy, but if you have already bypassed your bankruptcy and it's already been discharged, then you have a higher chance of being approved for these cards and stuff. All right, so that's also, you have to take into consideration, when was the last time you filed bankruptcy? Like if you was trying to get a credit card with the banks and stuff, some banks, the majority of banks, if you had a bankruptcy, it used to be 3 years, okay? Now, again, it depends on the relationship. Some banks went 4 years, but there are some banks that if you're 2 years past your bankruptcy and you're making your payments and stuff like that, they will help you start getting you approved for other business credit cards. Excuse me, not business credit cards, for other unsecured credit cards, okay? So that's something that you also have to keep in mind, all right? Now, if you're a member, let's talk about loans for a minute, because again, loans are going to play a factor in helping you rebuild your credit. It's very important. So if you're a member of U.S. Bank or Bank of America, if you're a member of U.S. Bank, Bank of America, they have small dollar loans, okay? They go from $100 up to $500 and stuff like that. So if you have bad credit, but you've been in good standing with them for the past 12 months and stuff, then they can help you get a loan. There's one lender I definitely want to give you all if you're rebuilding your credit, okay? And that's the Community Development Financial Institute, okay? They offer small dollar loans if you have credit scores over 500 and stuff as well, to help you start rebuilding your credit. And their interest rates are much lower than these secured cards here. Okay, so that may be a better way. Again, if you're financially strapped, you're on a budget, you may be on a retirement income, you may be on disability. Now, I'll tell you something else that may be the reason that you're being not approved for credit cards. Okay, there's a few reasons. One, if you have self-employed on your credit file, okay, that can be a red flag to get you denied a credit card. All right, if you have retired on your credit file, that can be a red flag to get you denied, as well as SSI on your credit file. Those three things there, those are red flags to get you denied a credit card, okay? Because they automatically know that you're working with a limited income and stuff, all right? So you have to keep that in mind. So those are some of the things that I think would help you start rebuilding your credit, especially with secured cards. If you're looking for secured cards for bad credit, no credit check and stuff like that, again, that's your OpenSky, your Green Dot, and Applied. All right. But again, if you don't have a social and you're still rebuilding and stuff, and you're looking for unsecured cards, then you want to check out Credit.ia, Tomo, Patel 2, Deserve, and Avant. All right, because those are fintech companies. And again, like I said, discover it. And with the student credit cards, again, that may be a good way for you to start building up credit with a student credit card. So that way it's an unsecured credit card. Granted, it's a low limit, but again, it's an unsecured credit card that's a trade line. So I hope that this video is helpful to you all. For those of you just finding my YouTube channel, again, welcome. And for those of you that's been following me and supporting me, as always, salute.